Who pays real estate closing costs when selling and buying a house? Hi, I'm Robert Chambers, and that's a question I'm asked during every transaction. I'll answer that question for everyone here today on Realty Talk. Okay, the answer is, it depends. The situations that surround each transaction are always individual and unique. It's one of the reasons I never get bored as a realtor. There are also some specific loan products that make different types of transactions possible. I'll discuss those too, so stick with me until the end. Sure, there's a structure laid out that presumes the transaction will follow a linear progression of steps, but it doesn't necessarily dictate that either party is bound one way or the other. Maybe it would be easier to use a very legalistic method that all transactions must follow, but that would also limit any opportunity for flexibility or creativity to help the transaction come together for both the buyers and the sellers. That's why, at least here in Colorado, everything's negotiable. And that's probably why I'm frequently asked this question. It's not etched in stone, and that's a good thing. If every transaction had to fit perfectly into a pattern template, the path to home ownership would be filled with roadblocks and become a cumbersome process that could possibly take many months to get a buyer qualified just to begin shopping for a home. On the other hand, what if the buyers and sellers could work together through their realtors on an amicable agreement that helps both the buyer buy and the seller sell? Well, that's how it currently works, and I wouldn't change a thing. This is the reason both parties should always work with a knowledgeable realtor. An experienced realtor who is a great negotiator can solve problems quickly and present a few different scenarios and options of how to accomplish a win-win for both parties. Now let's talk about some of the costs involved in a real estate transaction. Typically, the buyer will obtain a loan from a mortgage loan officer, and with that loan comes an amount for the down payment, if required, and the cost to get the loan, called the closing cost. There are also buyer costs for a professional home inspection and appraisal. I won't talk about specific numbers here since those will change over time and from provider to provider. I simply want to make you aware of the many facets to keep in mind and to be prepared for. For the seller, it's a bit different than the buyer. The seller typically has a few costs to sell the house, and they are generally related to the transfer of the title to the buyers. There's the owner's insurance policy for the property and the owner's extended coverage, and any unpaid taxes for the portion of the year the seller occupied the house through the closing date. If the house is in an HOA or metropolitan district, there could also be some transfer fees associated with the sale, in addition to the real estate commissions paid to the realtors. One of the fees that are typically shared is the closing services fee, currently in Section 15.2 of the Colorado Contract to Buy and Sell Real Estate, also known as the offer. I said typically, but again, everything is negotiable. The title company works for both parties to make the transfer of title possible, and their fee is minimal compared to the other costs involved with a real estate transaction. As I mentioned earlier though, everything is negotiable, and that means that either party can pay for or request the other party to pay for many of these costs, and you want to have those agreements up front and in writing. I love helping buyers and sellers by doing my best to set proper expectations, so I hope you're enjoying this video so far, and if you are, please like and subscribe right now. Now let's look at some of the scenarios I've experienced and some of the loan options that are available. As a prior service member of both the Air Force and the Army, I'd like to begin with the VA loan. Using the VA loan can be a great benefit for those who qualify, but there are still some costs involved that I'll explain. And if it gets confusing at all, just text me for a deeper explanation and I'll be happy to take the time to ensure everything is clear. And that goes for all of you. You may have heard of the lending term, and it's an acronym called LTV. I believe all members of the military are familiar with the acronym since it's practically a second language for them, and that acronym means loan to value. VA loan users can obtain a 100% LTV, which means that there is no down payment required because the loan covers 100% of the value of the home purchase price. However, there are lending costs and the VA funding fee. First, let's be clear. Lenders work harder than you can imagine, and they should be paid for the work that they do, so there is a cost associated with providing loans to their customers. Then there's also the VA funding fee, which is a one-time charge unless you're a qualified or disabled veteran who is exempt. But I won't get into the weeds with that here. But this is where it gets interesting, and it's also one of the most common experience I personally had with my VA buyer friends. It really hasn't been all that common in recent years during the low interest rate bidding wars, but sellers have been known to agree to offer concessions to the buyer in an amount that can be partial or equal to the closing costs that the VA loan user needs. When this agreement is made, the buyer usually ends up needing to bring little to no money to the closing table. Do you see why it's great when everything is negotiable? Since the VA loan offers 100% LTV and a down payment is not required, it's easier for a small amount of financial concessions from the seller to make buying more affordable or simply possible for VA loan users. The good news is seller concessions are not just for VA loans. Seller concessions can be requested by buyers who are using conventional and FHA loans too. Just remember, the seller doesn't have to agree. They can say no or counter back with partial concessions or even disregard your offer completely. It also makes sense that if they have other offers in hand that are competing with yours, the one that nets them the biggest bottom line profit will likely get accepted. But if your lender says it's the only option, that's the option we'll use. Okay, I'm not a lender, so I'm not going too deep here. But let's talk about one of the loan options that's become pretty popular lately. It's known as the 2-1 buydown, which temporarily reduces the first 2 years of your mortgage payment as if you had a lower interest rate, and then steps up your payment over those 2 years. For simplicity, let's say the first year of your total mortgage payment is reduced by 2%, the second year is reduced by 1%, and then on the third year you'd begin making the full mortgage payment or refinance to a lower rate. The only way this can work, though, is when you can get seller concessions to completely cover the buydown amount that the lender says is required. It's just another option, and again, isn't it wonderful that everything is negotiable? This can get complicated, so remember, if you need more information, I'll be happy to receive your text and help you with all the answers. Now let's flip the script and say the buyer is well qualified, loves the seller's house, and has the financial capability to really sweeten their offer to the seller. Since everything is negotiable, the buyer could not only offer a higher dollar amount, but also pay for just about any of the costs involved with buying and selling a home. The buyer could choose the title company and pay for the title insurance, owner's extended coverage, closing services fees, transfer fees, and even the real estate commissions if they were so inclined. The point is, anything the buyer pays for brings more money to the seller's bottom line, so keep that in mind when making your offer. When everything is negotiable, that means the negotiations go both ways, and each party should try to achieve a win-win, not a win-lose scenario. After all, no one wants to feel beaten up at the end of the day, so communicate your goals with your realtor and let them negotiate towards them for you. I know that's a lot of information, and I went a bit further than the basic explanation of who pays the closing costs, and that's because every single transaction is different. It's as different as the people who are involved in them. It's also why it makes so much sense for the buyers and sellers and each of the realtors to have the ability to be creative with options that help bring the transaction together. And that's why it's great that everything is negotiable. If the Chambers Group can personally help you, please text or call me, and I'd be honored to be of service.